Vitale, Vitale Wealth Management here with the Gradient Investments Weekly Market Update. All information is gathered as of the week of February 24th, 2025. Let's talk about the week in review. As we talked about earlier in the year, I think we're going to have a good year this year, but it's going to be met with a little bit of volatility till we understand what's going to be happening. As such, this is what's happening. It was a negative week last week. The S&P 500 was down 1.63%. The Dow was down almost 2.5%, and the Nasdaq fell 2.5% as well. Value stocks, which is the Russell 1000, held up better than growth stocks, which was the Russell 1000 growth. There's Russell 1000 value and then growth, both declining 0.94 and 2.76 respectively. Now, year-to-date international developed markets, which is the EFA, and the emerging markets, which is the MSCI, continue to outperform major indices. The S&P 500 and Nasdaq both reached new all-time highs earlier in the week before turning negative following mixed economic data. After a worse-than-expected drop in January retail sales of the previous week, the University of Michigan Consumer Sentiment Index declined to its lowest level in over a year, reflecting growing consumer caution amid inflation and tariff uncertainties. Meanwhile, January's existing home sales report showed a decline in sales as high prices and elevated mortgage rates continue to weigh on the housing market. We need to see that 10-year Treasury come down before we see interest rates change, because they're just still too high. There's not a lot of inventory out there right now. Upcoming economic release this Wednesday, we're going to see new home sales data that'll be published. Friday, we'll see the PCE report that'll be released, and then of course the market's always looking at that. Today, Nvidia earnings were out, and the market is turning down again because they're not happy with the Nvidia earnings. Let's see how that continues. Let's look at the market outlook as early season winds down. Investors are still watching several key reports this week. Home Depot and Lowe's insights on consumer trends will be in focus, especially amid slow house sales and elevated interest rates. Nvidia, one of the most anticipated reports this week, which is today. Investors will be watching for any signs of slow revenue on the commentary of DeepSeek impact. Additionally, Friday's PCE report, the Fed's preferred inflation guide, will be a critical data point. It could provide further guidance on the Fed's next steps regarding interest rates. It's a double-edged sword. They start lowering interest rates, then the market's going to react that, oh my gosh, we're in a horrible situation, but they've got to start doing a little bit at a time. We think it would be helpful, but we'll see how that goes. Recent activity, there was trade activity in the digital discovery portfolio. Notable changes, which is that we sold ROBT and buy QTUM and LOUP and IETC. So as you know, they rebalance every quarter if need be. Let's talk about Walmart stocks in the news. Walmart's owned the Core Select highly anticipated earnings report key insights into consumer health, while the company reported an earnings beat. Cautious commentary on consumer spending and potential tariff impact weighed on shares, which dropped nearly 9% for the week. BAE Systems, which is owned in the G40I, which is the international portfolio, the company reported better than expected earnings last week and positive commentary on increased defense spending in European Union. Further reported support of the stock. As a result, the stock was up 2.41% for the week. Remember, one of the things we talked about too with, we heard higher for longer, right? The Fed say we're going to be higher for longer. Well, that's the good news. So the good news on our side is we still have higher for longer rates, where even though interest rates are high, you could still get, if you say, Joe, I really want to get better income, can I get a guaranteed income lock? Yes, we have been doing more income annuities in the last year than we've ever done, and the main reason is because of the interest rate so high, you're locking in a much higher interest rate forever, and it won't go down. It's a guarantee. And if you look at the market, if you want to try to get that same kind of return in the market, you would have to get like 3% higher. And really the market's averaged pretty much 7.7% over the last 25 years, which is great, but net of fees are still, it's a good return, but my gosh, you can get a guarantee for right around the same. So that's why, I love the market. We love putting money in the market. We love the growth. The Core Select's been averaging 15% over the last 6 years. The G50E has been averaging roughly almost over 11% for the last 16 years. Those are great portfolios, but when you look at the blended return, take a look at the safe money, take a look at the bond money or the CD money. Those are things that we should lock up into some, or at least lock into some really good rates right now before they go away. That's it for us. Thank you so much for being a part of the Vitale Wealth Management family. If you need to get a hold of us, give us a call, 855-756-5700. Visit us at vitalewealth.com. God bless you. We'll see you again next week.